Is Nvidia more expensive than Tesla? That's one of the questions I want to answer in today's episode. But more importantly, I want to take a closer look at this market cap of over $1 trillion for the semiconductor company and kind of take a closer look at why Wall Street and the overall market believes that is the market cap it deserves. Let's take a closer look in today's episode. All right, guys, so welcome back to this channel, the number one semiconductor channel. So today, like I mentioned, we're going to take a closer look at Nvidia. This is my number one semiconductor company in my portfolio, but right now, a market cap of roughly $1.1 trillion. Is this crazy overvaluations, or is there something behind that investors should take a closer look? So what I want to do today is really take a closer look at revenue estimates and kind of analyst estimates that they have for Nvidia. I've done plenty of videos in the past. My past two videos have been one on an earnings overview where I kind of do a full recap, and the one I did yesterday was more of just taking a closer look at their data center solution. But what I want to do today is actually look at numbers, and I do believe one of the biggest reasons the company is valued the way it is, and we're going to look at PE ratios later on in a bit, is because of the huge growth opportunity that we're seeing in AI, and obviously their overall kind of H100 and all their AI solutions in both hardware, software, networking, infrastructure. So if we take a closer look, I want to start off with revenues. And first, let's look at revenue estimates for the current fiscal year. For those that are not familiar, NVIDIA just finished their quarter two of current fiscal year, so there's still two more quarters out there. Right now, after earnings, the analysts on average expect somewhere around $54 billion in revenue for the company to kind of come out with this year, where just prior to earnings, analysts were expecting roughly $44 billion. So I think that is insane, right? Just after their quarter two earnings and how analysts saw how much kind of market opportunity there is for NVIDIA, on average, they bumped it up by an extra $10 billion for the full year. And that's after a huge bump that they got in the previous earnings call when we still really started to see a lot of this AI demand. So I actually want to break it down. I do have a presentation that I've been kind of keeping track of where we get to see a little bit more of NVIDIA's revenue forms of their guidance. So here I have NVIDIA's quarter one actual revenue, which was roughly 7.2 billion. Then we have quarter two actual, which was 13.5 billion. We can see quarter over quarter, this company almost doubled its revenue. Now with quarter three guidance, they did give us guidance of roughly $16 billion. So remember, I mentioned previously that prior to earnings, analysts were expecting roughly $44 billion in revenue. And we can see after that guidance, in theory, if they're able to meet up this guidance for quarter four, they really only need to make somewhere between $7 billion to get that guidance that we kind of saw prior to earnings, right? Because we do know that quarter three guidance is roughly $16 billion. If in theory they do that and they kind of, what in theory is needed for quarter four would be roughly $7 billion, which obviously would have not been impossible no matter what kind of market we're in. Now, we do, like I mentioned earlier, the new estimates for NVIDIA's revenue for this fiscal year is roughly $54 billion. Now, that's a pretty penny. So now we're seeing quarter three guidance is roughly $16 billion. Now, in theory, what analysts are expecting somewhere between quarter four, the new estimates is roughly $17.3 billion. So there are a few things to see there. First, can NVIDIA really get to that $17.3 billion? I do believe the answer is yes, as long as the demand is here. One of the biggest issues for NVIDIA not being able to kind of really see a huge, what's kind of creating a form of bottleneck for their revenue is their overall supply. And they have mentioned that every quarter for the next few quarters, even leading into next year, their supply will increase sequentially. So that's why we see quarter two was roughly 13.5, and now quarter three, they're guiding for 16 billion because they're seeing that supply improvement. So if they're seeing kind of that quarter to quarter supply improvement, it's easy to say that, hey, for quarter four, they can definitely meet that $17.3 billion. Now, that comes with the caveat that, hey, with this AI market, is this AI demand going to stay here? Now, in the short term, at least for this year and probably for next year, NVIDIA has mentioned that they have plenty of visibility for the upcoming quarters. So I do believe for this year, and NVIDIA can definitely meet that expectations of roughly $54 billion. Now, I want to take a closer look at future estimates as well as earnings per share. But before we go any further, guys, we just hit 27.5. We're almost close to 27.6. I'm trying to hit 30,000 subs by the end of the year. So if you haven't, make sure to hit the subscribe button, the thumbs up. Let me know in the comments below what are your thoughts on NVIDIA. If you want to learn more about the semiconductor market, I do have a membership program with weekly videos and a Discord channel that's kind of ramping up. Make sure to join that if you want to do that. Finally, if you want to check out my special offer at fool.com, check out fool.com/Jose. If you want a free newsletter, I also have that. Check out Jose Najarro, that's substack.com, for a free weekly newsletter on a lot of updates happening here in the semiconductor industry. Now, Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode. All right, so now let's take a closer look at revenue estimates for the next fiscal year. And for the next fiscal year, analysts are expecting roughly $74 billion in revenue. That's about a $20 billion growth compared to what they're expecting this year. Now, is that completely unreasonable? I don't think so, especially if we continue to see this AI demand. And I do believe that's going to be the most important portion of this kind of evaluation for Nvidia. Is this demand only something we're seeing here in a few quarters, or is this something that we're going to see for a multiple of year span time? And obviously, Jensen, the CEO of Nvidia, would say that, hey, this is more of a long-term transition as the market is transitioning from unaccelerated opportunities and unaccelerated computing to accelerated computing. Again, if you haven't watched my channel if you haven't watched my episode, which was my previous episode where we took a closer look at their data center market, there was a Q&A session where Jensen mentioned, hey, look, there's about $1 trillion worth of data centers out in the market right now. This $1 trillion worth of data centers are not accelerated. Now, on average per year, companies are investing roughly $250 billion on data centers, and most of that money is going into AI acceleration right now. So in theory, to upgrade all those computers, you need at least in theory, 4 years, right? I don't think that's going to be the case. Not every data center is going to be upgraded, but I do believe at least there is some demand for the next 2 years or so. That's my personal opinion. Unfortunately, I want to say that demand is not necessarily always going to be linear, right? You're going to have times where there might be a slowdown on some purchasing as maybe some other opportunities arise, or some kind of macroeconomics or some other headwinds arise. But I do believe at least for this year and next year, there is enough visibility that this AI demand is here to stay for at least the next year. All right. So beyond that, obviously with technology, so much changes. And I think that's the hard part when looking at companies like Nvidia, is seeing where the demand comes from. I mean, if we take a closer look at artificial intelligence, it's important to kind of think of emerging technologies. I mean, we're seeing the advancement in things like autonomous driving, in autonomous in robotics, right? Robotics for both industrial and the consumer market. You're seeing more AI solutions as well. You're seeing AI being used in military applications, and all these are just in the entry levels. And as they continue to grow, obviously the opportunity can continue to grow. Now, the real question is, are there going to be better solutions outside of NVIDIA's chips to be able to manage that and at a cheaper price? That's the risk as well, right? That competitive pressure. But I do believe $74 billion for next fiscal year is possible. Now, if we take a closer look at Y charts, we can see they even have revenue estimates for 2 fiscal years from now. That's roughly 2.5 years from now. So it's the 2 quarters, the half a year that's remaining now, and the 2 years left over, right? So they expect roughly $92 billion there. I want to say, for anybody doing any forms of projections with these numbers, definitely take it with a grain of salt, because like I mentioned, technology, the market evolves, especially with something like this in advanced technology, evolves so quickly. So I personally wouldn't like to look at 2 fiscal years ahead. Now, here's the overall chart, just taking a closer look at revenue estimates and how they have kind of jumped up since the overall earnings last week, where analysts are now amping their overall stock, their overall valuations in forms of revenue for this company. Now, what I want to take a closer look is earnings per share. We also have a lot of estimates for earnings per share. Analysts roughly expect earnings per share to be roughly $10.82 for this year, which ends in 2 quarters. $10.82. Right now, the stock is sitting at roughly $460. That's probably a PE ratio closer to like 42, 43. Me personally, that doesn't seem that crazy, right, for a company evolving dramatically. And that's for this fiscal year. Now, if we take a closer look at earnings per share for next fiscal year, it's expected to be roughly 15.8, $15.88, right? So again, I don't believe it's impossible for them to meet these estimates as long as demand is here. Unfortunately, though, right, in the overall market, there's always a lot of hiccups in any business, even if they have executed before on almost on a clean record. There's always that probability of something going wrong. And I do believe right now, while Nvidia is priced to perfection, and that's the real cause, the real pain here is priced to perfection, purchasing at these levels might be might be too much risk compared to reward available. If we take a closer look at earnings per share estimates for 2 fiscal years, again, I mentioned this is probably too far ahead. Earnings per share, I expect it to be roughly $20, right? So now I wanted to take a closer look at how these earnings per share compare to some tech companies. If we take a closer look at, where do I have it? I have it somewhere here. Yep, here we go. So I have NVIDIA's forward PE ratio, and this is for the end of this fiscal year. And this fiscal year ends in 2 quarters. NVIDIA's PE ratio is closer to 42.5. Now, when we compare this to a company like Microsoft, the mature tech company, PE ratio of Microsoft is 29. I personally don't believe it's that much. Obviously, it's more expensive than Microsoft, but you do have more growth opportunities with NVIDIA. Obviously, if you have more growth opportunities with NVIDIA, you also have more risk, unfortunately, on your end. But I mean, if we take a closer look at PE ratio forward, 42 doesn't necessarily scream completely overvalued. Now, if we take a closer look to one of its closest competitor, AMD's PE ratio is closer to 37. Very similar at the moment. So again, it doesn't tell me that NVIDIA is completely overvalued if these estimates are correct. And that's going to be important. Are these estimates correct? Like I mentioned, I do believe for at least this year, estimates are correct. Might be a little bit too early, but I do have maybe like a 70-80% confidence that for next year, it's also kind of possible and very likely for that to happen. I do want to say I follow the semiconductor industry pretty closely. I do believe analysts are underestimating AMD. I do believe in theory AMD is going to blow out things over the water, and I do believe these PE ratios are going to be a lot lower. I think AMD is sitting at an attractive price. That might be another episode that I might want to cover later on. But now if we take a closer look at Tesla's forward PE ratio is currently 69. So in theory, NVIDIA, the AI king, is a lot cheaper than Tesla in current valuations. And I want to say both these companies have huge growth opportunity. I am a Tesla shareholder, but looking at this, it just gets me more excited about NVIDIA. Now, I wanted to take a closer look at forward 1 year. And forward 1 year, remember, that's the end of next fiscal year, so it's about a year and a half from now. NVIDIA's PE ratio with current estimates, and like I mentioned, I do believe a year and a half is a little bit too hard to plan ahead for or kind of estimate, but I am kind of like 80% confidence that they are able to meet those expectations. Obviously, as we get closer to that year, I'll be able to see more visibility of how the market is acting. But with what we know right now, I do believe NVIDIA is going to be able to meet those estimations next year. So right now, PE ratio is closer to 30. Now, if we take a closer and compare that to Microsoft, Microsoft is roughly forward PE ratio of 25. I think this is showcasing that why Nvidia, if we're looking at estimations, estimations in earnings per share and revenue, it's not completely overvalued like many people think. If we take a closer look at AMD's forward PE ratio is closer to 24. Again, we can see Nvidia continues to stay over that 30. Now, if we take a closer look at a company like Tesla, Tesla's PE ratio drops from the 60s down to the 40s. But again, we can see that in theory, Nvidia at the moment is much cheaper than Tesla. So if these valuations and if these estimations of revenue and earnings per share are correct, then Nvidia's valuation is not necessarily the craziest thing out there. Maybe some might argue, and that's okay. I think everybody has a different investment style. Now, the real question is, are they going to be able to beat these estimates, or at least meet these estimates? Like I mentioned, I do believe for this year they are going to meet estimates. I don't think, especially even right now with the huge bump up, I don't think that's going to change. I think for the next fiscal year, which would give them that PE ratio of closer to 29, from the visibility that we have now. Excuse me, let me take a quick drink. From the visibility that we have now, I do believe it is roughly 80% possible. I would put 80% of my money ready that, yes, they are going to beat it if I had to make a bet. But again, things can change in this market, and that's why you have to always be looking at where the industry is going, what are the opportunities. Like I mentioned, greatly for Nvidia, one of the great things is right now we're seeing AI, but there's a lot of emerging technologies and a lot of customers like the government I mentioned, right? Military is still probably such a small place in the AI, but I mean, can you foresee future military projects just purely being AI developed? I think the answer is yes, right? So that's a huge market opportunity there, and obviously all the kind of upcoming products. If the metaverse is ever real, or we ever get to that, the increasement of graphics, of AR or VR, of gaming, of content creation, I do believe there's plenty of opportunity for Nvidia. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.